All right, traders, here's a look at your market snapshot today. Dow, NASDAQ, S&P, the Russell, all down, although the indices ended a little more than 1% up from their intraday lows on some short covering towards the end of the session. The VIX closed higher by 14%, but was down from near the 36 level, which was its intraday high. Some of you may have caught the morning video today where I talked about a trap that the market was forming last week, and we'll get a chance to go over it in more detail in the charts portion later on in the video. The major news driving the day was continued rumblings about the president looking to fire Jerome Powell as Fed chair, and I'm not sure if that is being used as a tactic to drive attention away from the carnage of the tariff campaign, but it's certainly causing havoc on the market, especially to treasuries, as well as the dollar, which we will look into later. Taking a look at the heat map, none of it is good news except for Netflix, which showed some strength by holding higher on a down day. But otherwise, big tech was down more than 3%, with Tesla and Nvidia being hit the hardest, down nearly 6% and 4.5% respectively. Moving on over to the charts, this is what I wanted to show you from this morning's video. This is last Thursday's price action. And notice after some initial selling, there is some buying that goes up in the market, but it gets met with resistance and eventually blocked into a channel. I did take two trades, two shorts on break of buying structure, but notice how the entire day is basically one big bear channel, setting up for a liquidity grab to the downside. The market did eventually grab that liquidity as futures opened up Sunday night and sent the price lower. That brings us to today's market action. Notice how the market was mostly in this long selling channel as marked by these two teal lines. In between, you had this orange algorithm that was helping in building liquidity and sending the market lower, which it did several times. Notice how there is some liquidity built here, and there's a head and shoulders pattern that forms, and another one that forms here towards the end and the bottom of the channel. But towards the end of the day, there was some buying, maybe shorts covering. But at any rate, we broke out of this descending channel, and now we're breaking out higher from it. So wouldn't be surprised if overnight we perhaps move up a little bit and then reassess at a higher level where the market wants to go from there. Looking at the SPY 30-minute chart, we get a bigger picture of what's going on with the market. Currently, we're bouncing off of this orange buying channel, which connects to the lows from last week. And notice that on the top side, we also have resistance coming down on this magenta channel. So orange and red will meet and form a wedge where we may just bounce into the apex before the market breaks out in one direction or the other. Similarly, today we have plenty of liquidity here to potentially provide a left shoulder for a head and shoulder pattern. The market can easily go back up and form resistance up at the top, right underneath the 5-day moving average, and then reject and come back down and sweep this left shoulder liquidity. And notice that further out, there's a lot more liquidity here, which can easily be swept as well if the market pushes through strongly enough and triggers stop orders. So potential for a big downside move. To the upside, this area here today that we bought up in can also be an inverse head. There's a left shoulder not too far above, and you can see how we can bounce on the right shoulder, take out the 5-day and clear it, and then eventually take out this resistance line and head higher back up to the 20-day and beyond. So plenty of possibilities and scenarios to prepare for. No one knows how it's going to happen, but one thing to note is we're kind of getting into the middle of this range now. So if we're not right on the edges, just wait till see clear direction before taking a trade either way. Notice also that the 5-day moving average can easily start tracking down this orange algorithm, which is this selling channel. It's a pretty gradual channel, so it's a little tougher to get a nice trade here, but we could easily start grinding down lower and seeing if we're going to test that left shoulder liquidity from last week. But we'll have to see if we head lower before we get to that point. Just looking at one more chart on the ES, it's the daily chart, and you can see that the moving averages are heading lower. We have the 200 up top, the 20, the 5 here, and they're all lining up with the lower Bollinger Band, which has some room to go to the downside. So the market can easily go back up, retest, reject under the 5, and head lower down to previous lows here. Or you could even take that level out and go a notch below. But we'll have to see how that shakes out. Conversely, you can see that the market is up overnight. Futures are pretty strong. So market can easily test this upper level at 52.83, which we've been bouncing around in, both as resistance and as support. And if that were to be the case, you would see a sharp bounce higher, and you would want the 5 MA to be some sort of support and to basically pierce through the 20-day and start trending higher. Okay, looking at some other charts now. First of all, gold having a massive multi-year breakout. Clearly there's some strength here, and it's showing signs of a little bit of panic about the state of the economy and the market. It's really just pinned right on this 5 MA here. So any entry in gold, you want to see this 20, the 5 hold first of all, and then see if this 20 MA will go up and catch up and provide secondary support against the 5, and take a possible long there with a stop just below the 20. The RSI is showing that it is a bit overbought, and the last time it was overbought there was a little bit of a sell down. So any entry, safer bet would be to wait for a retrace. Bitcoin, we're kind of range bound here. You can see there's a bunch of wicks setting out the range. We're either tapering down in a taper pattern where you would see a break of this and a move lower, or you can also see that we might be actually breaking out of a bullish channel and using the 5 MA as support for a move higher. You want to wait for the 20 to also come up and provide secondary support for a move long. Dollar, nothing but bad news here. This is going straight to the tank. It's the 5 and the Bollinger all heading down. The 20 is pretty close by. If you want any more downside movement, you want to see if it retraces a little bit to the 20 and heads down, or else a breakout out of the 20 up to the 200 period moving average. Finally, the VIX. We've had a pretty interesting couple of months. You'll see that we're back down to support. I do think that the VIX is starting to break out again a little bit, but it may not retest the absolute highs of this particular phase. So look out for this upper Bollinger Band as potential resistance to the top side. Other than that, we have a bunch of Fed speakers this week along with some PMI numbers. The Beige Book is out on Wednesday, and then we have jobless claims on Thursday as usual. And don't forget, we're also in earnings season, so there should be some interesting moves post-market, including Tesla, which reports tomorrow after the bell. So thanks for watching the video if you got this far, and I appreciate your patience and as I get set up around here. But otherwise, I will try to keep putting these out daily, and hope to see you back here tomorrow. Have a good night, everyone.